Adebayo Ogunlesi argues the traditional model of relying solely on governments to finance infrastructure is no longer sustainable, leaving modern nations dependent on private wealth. South Africa is a primary example of this shift. President Cyril Ramaphosa is currently attempting to secure 3 trillion rand in total investment over the next 5 years to address the country's capital needs. Significant funding is required to fix physical bottlenecks. Failing power grids and transport networks are currently increasing operational costs and slowing economic growth. The country's economic outlook now depends on its ability to attract massive amounts of external capital to stabilize these systems. While the government is seeking more funding, many global institutional investors have begun to pull back. This chart shows South Africa's position on the 2026 Kearney Foreign Direct Investment Confidence Index. The country recently dropped from 7th to 12th place. Analysts attribute this slide to political uncertainty and physical infrastructure decay, making the market less attractive. South Africa is now competing for the same pools of institutional capital as the United States, major Asian markets, and the GCC countries. Without a significant change in market direction, the gap between the country's infrastructure needs and its available funding will continue to widen. On May 13, 2026, Adebayo Ogunlesi used a high-level summit in Cape Town to address this capital vacuum. Ogunlesi built Global Infrastructure Partners into a massive independent manager before it was acquired by BlackRock. He now sits on the firm's Global Executive Committee, representing a unique bridge between private equity and asset management. At the summit, he disclosed that BlackRock already manages 500 billion rand in South African assets, with plans to double that exposure over the next 5 years. President Ramaphosa responded by urging BlackRock to go further, stating that a doubling of investment was insufficient and that the firm should aim to quadruple its stake instead. This was a structured capital signal, delivered directly to the decision-makers who control the regulatory environment and the pace of procurement. BlackRock's strategy focuses on established sectors, where their GIP division has existing operational experience, rather than starting new, unproven projects. The capital is targeted at critical physical systems: electricity transmission, renewable energy, rail, and ports. Future demand will also be driven by artificial intelligence. Reliable power and data centers are the foundation of AI growth, and South Africa's energy pipeline is positioned to serve these assets if constraints are removed. Ogunlesi was direct about the requirements for this investment. He noted that capital flows toward countries that guarantee policy certainty, transparent procurement, and the rule of law. Private capital now acts as a global regulator, requiring nations to commit to structural reforms in exchange for the funding needed to sustain their economies. A commitment of this scale functions as a countersignal, challenging the data that previously suggested a cooling market. A multi-year commitment from the world's largest asset manager reprices a country's risk profile in the eyes of the global market. Family offices and institutional investors track BlackRock's positioning as a benchmark for where the next layer of infrastructure capital is likely to flow. This summit changes how global investors evaluate South Africa's reform trajectory, moving it from a political promise into a factor that must be accounted for in risk assessments. By signaling this deployment, BlackRock has effectively bolstered market confidence in the South African infrastructure sector. This is part of a larger continental strategy. President Ramaphosa also confirmed a separate $500 million BlackRock commitment to the African Infrastructure Fund 3. Investment is now moving on multiple concurrent tracks, targeting logistics corridors and transport infrastructure across the broader African continent. These combined capital pipelines ensure that South Africa's physical networks can expand alongside global demand for digital and energy systems. Securing these long-term commitments is the primary mechanism for maintaining a competitive foothold in the modern global economy.